Hi guys, and welcome to the first edition of our weekly analysis for the year 2024. So yeah, I hope most of you guys had a great festive season and a wonderful new year. Just have to thank God we're still here. Not many of us made it into 2024. So yeah, a luta continua, guys. We are still at it, looking at the markets, looking to improve on what we already know, looking to perfect our skill, one of the hardest skills to embark on. And yeah, I just hope this year a few of you can get like that breakthrough that you are looking for in the markets, and also just being in a position to trade the markets in a proper way, not just a random here and there trading. So yeah, with that in mind, Ronald asked for my view on the precious metal. So we're gonna start with the precious metal and then have a brief look at dollar index, which then in turn can give us a bit of an understanding of what really we are looking at in this coming first quarter. So yeah, just to briefly speak about what has been happening in the markets, and all of you know that the narrative is all about inflation and interest rates in this moment in time. And I do believe that this year, I think interest rates, they are going to take I think further importance in regards to directional bias which the markets are going to take. The narrative of rate cuts is going to be a big thing this year. Of course, we still have the inflation issue, but inflation has cooled down since the last parts of third quarter from last year and fourth quarter. So it's those things that you need to be aware of, and understanding whether the central banks are really gonna start cutting rates, or is inflation gonna spook them up and probably maybe increase the rates. One thing I would say is, guys, just be careful of what you wish for when you're looking at the markets. Things might not be exactly as they seem. So yeah, just keep that in mind. So now let's look at gold. Right, so with gold, the higher time frame narrative is that price is currently respecting higher time frame discount arrays, right? Mainly weekly fair value gaps are being respected on gold. That's why you see that it's struggling to create new lows. So I've just marked out this external range liquidity, which was taken out last month. These buy stops up here. So we've got buy stops, external range liquidity. Market did take them out, but we haven't seen a clear reaction as to price wanting to trade away from that level. That shows you the significance of how strong the bulls are. So gold at this moment in time, I think it is clearly bullish, right? But we need to be in a position to react to what's been happening of late in the market. It is bullish, there's no doubt about that. Our market structure is showing us a clear bullish directional bias, meaning when you go on to a lower time frame, whether your entry time frame is H1 or H4, you need to clearly see a market maker buy model. You see, you need to clearly see a market maker buy model. And for you to start thinking of going lower on the precious metal, one of these lows has to be traded through internal range liquidity of sell stops. So we have sell stops, internal range liquidity. We've got sell stops from the current month low and the previous month low. We've got our sell stops there in the form of internal range liquidity. So if we go to the weekly chart, right, if we go to the weekly chart, you can clearly see price is finding what? Support inside weekly fair value gap. Price is finding support. So the gray shaded area, that's our monthly bullish order block, right? Expect price to be sensitive to that level once it trades back. So now with this down close candle, price is finding support and pushing to the upside. We already had another last down close candle here which traded into our monthly bullish order block, and price found support and pushes to the upside. So expect price to trade lower on, say, H4 and daily into discount area. Like for instance, we've got this daily fair value gap right here. You can see that this level is going to be sensitive to price. And then we've got another one right there. So these levels are going to be sensitive to price when it reacts to that level. So we've got our sell stops below and also below this level here. Those are the current month low, previous month low. You can see how price reacted here. Impulsive move, your clear directional bias. Look how price reacted here on the daily chart. Impulsive move to the upside. So now you can clearly see the target right now is this previous old high, right, which is the current month highest price point. So you're going to see price reaching out for that level. Coincidentally, this comes about gold being what? Being strong, right? So this swing high here is vulnerable. This swing high of current month is vulnerable. So we've got buy stops here, which is internal. No, this is external range liquidity, right? So some are gonna say, but we still have this candle here. Now this candle here represents a huge displacement in price. Why I'm saying this is external range here and this is internal range. I think I marked it right here. You see, these are all internal range, right? So I am talking in particular this level here, this expansion here. That's the one I'm talking about. So this can probably be an external range, but the fact that we're inside this price action where we've got our monthly bullish order block, that classifies this as internal range. So take note of that. So this old high here, like around 2088.31, is vulnerable to price moving to the upside. So expect price to reach out for those buy stops. So what then do you need to look, or do you need to see on H4? On H4 you need dips into discount array for an expansion, dips into discount array for an expansion. Right now the clear discount array on higher time frame that we have is this daily fair value gap. So this level here, expect price to react to that level before it moves to the upside. So yeah, that's my understanding, my thinking that I'm going to have on the precious metal. I'm expecting price to move further to the upside, but only from higher time frame discount arrays. So yeah, Ronald, I hope I've touched a bit where you can also add your own analysis. You can also add your own thoughts and your own thinking on how you're going to approach trading the precious metal. That's the whole idea, guys. The whole idea is about me giving you a bit of an understanding, and then you can have that and aid your own analysis. Thereby you can improve in the way you look at the market. And it's not always the case that I'm going to be right. It's not always the case, but we have already seen in most cases the analysis that I talk about comes to fruition. Things always comes to fruition. So now let's look at dollar index. Right, so with dollar I remain bearish. Right, I remain bearish with dollar. I remember a couple of weeks back I was like, let's take note of the protraction levels, protraction phase that's gonna come in the month of January, and that protraction phase is ongoing at this moment in time. Now we've got our OB plus fair value gap, high probability, that's level number 1. OB, fair value gap, high probability, that's level number 2. This is on the weekly chart. If we go back to the monthly chart, you can see already this is the protraction level, the retracement level into premium that I was anticipating, and that could go on until say end of February, beginning of March, before we start seeing another expansion to the downside. So just be well aware of that. Price is gonna offer moves to the upside, and people are gonna think that okay, we are now going back higher. The only time that narrative can be true, the only time that we can expect probably dollar index moving back say above 105, the only time we're going to have that narrative is if inflation keeps going lower and then the central banks don't cut rates. You see, if inflation keeps going lower and then the central banks do not cut the rates, we are going to see dollar keep moving up and up and up. Or if we do get a whole bunch of escalation in the world, like as it is at this moment in time, it's like the world is tense. Whatever is happening in the Middle East, whatever is happening everywhere, you see, it's like the world is at a tense moment. So yeah, it's those things that can only change the narrative of a dollar heading lower. But as it is right now, going into the trading year, I'll be looking for dollar trading into a premium, higher time frame premium level before it moves lower. And we already have that. Price has already done that. You can see that there was the previous week, 2 weeks ago, we had price filling up the fair value gap, though we just missed it a bit and then it moved lower. That's a clear setup. Market maker sell model. Market maker sell model on which time frame? On H4. You see, on H4 you can clearly see there, this is the level I'm talking about, and we've got our bearish breaker right here. Price comes to that level and it expands to the downside. But if you look at the current H4 time frame, this is just a market that is consolidating, right? So with the dollar index, your approach right now with dollar index is expect price on monthly, weekly and daily expect price to move from internal range liquidity to external range liquidity, right? Points of interest are going to be like, if you go to the monthly chart, let's go to the weekly chart. If you go to the weekly chart, this low here becomes your overall target, and on the daily chart, right, you need to see a proper market maker sell model being formed. Like, for instance, right now I do believe we've got market distributing here inside that weekly fair value, just below the weekly fair value gap, right? This fair value gap right here, we've got market consolidating below that level. Now, if we go back to the weekly chart, right, if we are looking for shorting opportunities, we've got this level here, internal range liquidity of sell stops that are below previous week's low. You see, those sell stops there, internal range liquidity, they become your target as in regards to where dollar will ultimately trade to as we approach what I would say the proper trading week, the first proper trading week for the year. So we've got that bearish order block accompanied by a fair value gap. That's your target for shorting opportunities, and price will definitely find support once it reaches there, which is now your sign to exit your short position. So targeting this internal range liquidity of sell stops, and ultimately 3 weeks back's old low, and then also this here, this level here, right there. So this level is your quarterly target, first quarter of 2024. That's your target, right? The overall draw on liquidity right now on dollar index is around, say, 100.50, right? 100.50. Let's see right here, 100.50 relative equal lows. See, relative equal lows, and then also ultimately you're looking at 99.50, right, which is this relative old low, right? So on H4 you can clearly see dollar is still consolidating. I'm thinking if prices creates a manipulation for taking out the swing highs, if we do get the previous week high or the high of the week before the previous week, if we do get price taking out this old high here, right, depending on the fundamentals that will be at hand or at play, I would expect price to expand to the downside, targeting to fill up this weekly fair value gap right here. So yeah, I'm still bearish on dollar index, but only after a clear liquidity engineering to go lower, that is in premium zones, in your premium areas. So yeah, that's pretty much about it to start the week. What else can I have a look at? Brent is bearish, looking for market to go to the downside on Brent from premium levels. The analysis which I did there, price eventually reached for that level. So right now expect this area here to provide resistance, and price pushes lower. I think heading towards 73 or $72 a barrel could be a target. But these weeks here, see the weeks 1, 2, the weeks on these two candles here, yeah, might give us a bounce to the upside, but expect that move to the upside to find a whole bunch of resistance right around 82.97. If it's a case that we are going to run higher, expect 82.97 is your resistance level. So yeah, that's pretty much about it. Euro and pound quite strong, right? Euro and pound, these assets are very strong at this moment in time. For euro, we've got reaccumulation in fair value. We've got reaccumulation in fair value, and this weekly bullish order block right here, expect price to find support once it reaches that level for a push to the upside. You see, weekly bullish order block, expect price to find support before it moves higher. You can see there on the daily chart, that's a reaccumulation in fair value. If you go to H4, you see there's the reaccumulation. So what you need to see right here, you need a run below a swing outlaw on H4, probably looking at this level here or that level, price trading below before it moves to the upside. So euro, you're looking for higher time frame movement, you're looking for long trades. Pound is very strong right now, you're looking for price to go to the upside. Same applies with Aussie dollar and New Zealand dollar. As for CHF and CAD, we're looking for price to go lower, we're looking for price to go to the downside. So just like dollar index, you can see there we've got redistribution in fair value, previous old low, price should move lower. And then CHF, you can clearly see we are redistributing again just below fair value for shorting opportunities. So yeah, that's pretty much about it. For gold, I'll be looking for long opportunities, H4 market maker buy models for price to move to the upside. That is on gold. Expect price to move to the upside, targeting 2086 from say around 2013 2015 per ounce. Expect price to expand to the upside. Ultimately, if we do breach the $2,000 a barrel, and if 1980 or 1970 does not hold, then we are going lower, and probably by that time we would have got proper information, proper fundamentals out there that would have told us that dollar is strong, thereby gold should go lower. So yeah, I hope this is going to be insightful in your approach to the coming week. And if you have any questions or any clarifications that you need, you can always send a message on the group. And for those who haven't subscribed to the channel, guys, I urge you to subscribe, because this year I'm going to be broadcasting on YouTube more often. I'm going to be doing our analysis straight to YouTube, so that I don't have to be recording and rendering the stuff. I just do it once and then it gets uploaded. So yeah, with that, I wish you guys good luck and happy trading. Thank you, folks.